Welcome traders to our midweek technical analysis video. So jumping straight into the things here where the market opened up. So price opened up at this level of 3,370. If you remember from our post-week market review, we spoke about this level of 3,370 being a main pivotal point for gold. As you can see, upon market open, volume and liquidity was, volatility and volume was low. We saw price drop a significant amount, around 100 pips, and sort of tested at this level of 3,365 as a support and consolidated at this level on the lower time frames. Price then pushed up just above that 3,370 again, and then we saw some slippage and some high volatility enter the market throughout the Asian session, driving price all the way down to 3,350, which, as you can see, was, and if you remember as well, was the top side resistance of this consolidation block that we spoke about a couple of weeks ago. Since then, price pushed all the way back up in a very, very big bullish candlestick. Price pushed all the way up to 3,380, and price done the same thing, but we saw a break and retest pattern signaling to us that we was going to see a continuation of this bullish momentum. As you can see, we ended up testing previous resistance of 3,370 as a support, with price then pushing up, creating its next higher high at the level of around 3,393. Since then, price has dropped back down to test roughly the same area of 3,370, and as you can see, as of recently, with the help of the New York session volatility and volume, we are now seeing a bullish impulse where buyers are now driving price back up to that 3,393 area. With that being said, what could we expect? So it's going to be the same sort of thing that we spoke about in our post-week market review. We're looking for price to target that 3,400 area, which is around about here. So what we're looking for is price to continue up to this area, which is going to be above our point of interest of 3,395, which this last high failed to create. But obviously, as you can see, we are stepping up with these sort of higher highs. If I mark them out, well, higher highs and higher lows, higher highs and higher lows. They're not much different in comparison to each higher low. Obviously, we do have this like slippage area here, which sort of we can invalidate it as it is going to be some economic or some sort of news event or some sort of whale that's injected a lot of volume into the market. So we're going to completely ignore it. But with that being said, the higher highs and higher lows aren't very significant in terms of distance, but it definitely is still higher highs and higher lows. So if we go ahead and drag a trend line in, so from our point A to point B, grabbing as many wicks as we can. There we go. So this is obviously, this would be our point A, and then this would be our point B, and then we just sort of drag it into the future, making sure we don't change the points that we've put it on from point A and point B. And then it's going to be the same thing from the bottom side. So we have our point A and then our point B, again grabbing as many wicks as you can without crossing the body of a candlestick, like so. So as you can see, dragging it from our point A to point B, you can see that we are in this bullish wedge right now, but that bullish wedge is coming to an end, and as you can see, price has in fact slipped out the bottom side of that. That does not necessarily mean that price is going to now flip bearish and we're going to see price drive itself back closer to that 3,200 mark. It just means that price is now moving sideways. We have finished that strong bullish wedge of higher highs and higher lows created, and we are now going to see some consolidating price action before price then decides to either drop down slightly or push back up and surpass that level of 3,400. Again, if we do see the level of 3,400 passed before our obviously post-week market review, we're going to be looking at our next level of around 3,410 to hold price as a resistance. This is a lower time frame level, with the next higher time frame level being 3,425. So that's sort of what we could expect to see for the rest of the week. Price action is bullish, so we're going to go with the overall probability of a bullish move being a lot higher than a bearish one. But obviously, as the market works in its own ways, there is definitely going to be a possibility for some bearish momentum or a bearish flip. Obviously, if we are going to see a bearish flip, the first level, again, the main pivotal point for gold as of recently is 3,370. If we do see bearish momentum and an overall bearish bias, then we are going to be looking at that level of 3,370. Anything above this level of 3,370, even if price comes to this level and tests it as a support, we're going to class this as a bullish market in terms of the time frame that we are marking up as of right now. That is the hour one. If anything drops, if price drops below that level of 3,370, we're going to then class it as a bearish market. So that level of 3,370 is going to be sort of our main point that we're then going to establish whether price is going to continue on bullish or flip and go bearish. So with that being said, that's going to be our midweek technical analysis video. Keeping things short, sweet, and simple is what we like to do. It's what we know best. There's no point waffling on too much about things that don't really matter. Concluding our week so far. Price has been bullish. We've had a slight bit of slippage through the Asian session on Tuesday night, or the early hours of Tuesday morning, should I say. Other than that, price has been creating higher highs and higher lows, with the most recent higher low around 3,375, and we are now seeing some bullish momentum again enter the market, and we are now expecting price to push up and surpass the previous higher high of 3,393. So once again, that's going to be our midweek technical analysis video. As always, I hope you have all enjoyed. Don't forget to like, comment, and subscribe, and I will catch you in the next one. Peace.